Are you an annuity producer that would love to easily add $30,000 to $50,000 of additional income?
30 or 50,000, huh, Paul? That sounds intriguing. I'm excited to hear about this.
Sure. Well, Steve, we've talked about this before, and now I really want to highlight, especially going into the end of the year with financial reviews and people focusing on, budgeting for 2026, maybe heading into retirement next couple of years.
Yeah.
One of the most overlooked things that I see with people either doing assets under management or selling annuities is that they don't ask the debt question, or they don't focus on helping people get out of debt as part of their retirement plan, or even just their general financial plan.
Yeah, I mean, not asking it is kind of a big mishap because, I mean, if you're able to find a way to maybe free up some extra income from them, maybe sometimes annuity might not be the right fit. Being able to eliminate that debt can kind of help out in a much better way, right?
Absolutely. Well, let's just talk about a couple obvious reasons right off the top. Okay. So the first of which is the vast majority of people out there have debt, and a lot of people heading into the retirement are carrying anywhere from $80,000 to $120,000, $150,000 of debt. They're still paying on a mortgage. They have an auto loan to pay off. They maybe have a medical bill, credit card, whatever the case may be. Okay. And what are we really ultimately trying to help somebody do heading third base, heading to home for retirement? We're trying to help them find their number, right, of what they're going to be able to comfortably retire on and live comfortably in retirement. Are you going to be able to do that easier by growing the assets more, or maybe getting rid of that mortgage payment and all those debt payments, freeing up $1,500 to $3,000 per month?
Yeah, it certainly feels like that way, right? Being able to eliminate $1,500 to $3,000 a month would really be able to free up their lifestyle that they want in retirement, so their number that they need could be less.
I mean, number could be more, right?
Well, it could be more too, in that way too. The amount that they want to accumulate.
Right. What they're able to retire on, we're going to get more to retire on, is what we're saying. Okay, so there's some other benefits too, okay, which aren't as obvious. That this is what I'd really like to talk to the advisors out there in this space. Okay, the first of which is whether we're living off of assets under management, our IRAs, 401ks, qualified accounts like that, or we're maybe transitioning into some annuities. We're either in the contribution phase or we're in the distribution phase. And Steve, once we start distribution, can we go backward the other direction?
It's pretty difficult. It doesn't seem to make a whole lot of sense. Your whole life, as you're working, you're contributing, you're building, and then when it comes to retirement, it's time to distribute that. So, kind of doing both at the same time, it's kind of a bit unusual.
Right. And let's just go through a scenario that happens to many people in retirement. Okay, maybe their parents pass away and they receive an inheritance. Well, you can't put that back into your qualified account. You can't put that back into your annuity you've distributed from. However, life insurance offers the opportunity to contribute and distribute flexibly however we see fit. Okay, especially if we're taking loans against our life insurance policy. We can then pay the loans back to recontribute that money with that freed up cash flow as we see fit. Second thing that I like to point out is if we're distributing from either an annuity with an income rider, maybe we're taking periodic distributions from an accumulation annuity, or we're distributing from our retirement accounts, qualified plans. Okay, do we want to compound the effect in a losing year by taking distributions from a decreasing account? You can see the compound effect, right?
Right. Yeah. It's going to really mess things up sometimes.
Okay, so adding the life insurance element into it allows us, again, some flexibility to maybe we take loans or distributions from the life insurance policy, allow those accounts to recover, not compound that effect. Okay. Last thing I like to always point out is this, and life insurance, along with annuities, allow us to do this versus assets under management. Okay. In order to have an account to draw from when we have assets under management, again, our qualified accounts and so forth, is unless we know exactly when we're going to pass away, we can never spend all of our own money in our own lifetime, right?
Right.
Okay. And annuities, would you agree? And also life insurance, is what I'm trying to point out, allows us to not only spend all of our own money in our own time, but if we're still alive, the insurance company still keeps providing a paycheck, don't they?
Yep. And then imagine also then you got a death benefit then also with that life insurance as well.
Right, exactly, which is one of the last points too, is by investing in life insurance, putting our money and parking it there to leverage it, we automatically increase our estate on day one so that we don't just get the account value back that we've invested, but we get more than that in the form of a death benefit. And the other thing is this, lastly, is that life insurance is one of the few vehicles with an after-tax dollar, we're growing tax deferred, and it's all coming out tax-free. So we're completely eliminating the tax guy as well. So, Steve, it works the other way as well. We encourage our advisors with Equity XL that when people share their financial information and they have dormant retirement accounts or they have assets under management, converting those into annuity opportunities as well. So it works both ways. So for you advisors out there that want to become more of an advisor versus an annuity salesperson, an Equity XL salesperson, add the other tool to your tool belt so that you look like a full service provider and you're providing the proper solutions for your clients that give them the most options and flexibility. But on behalf of Paul Bechtold with the Life Insurance Department at Gordon Marketing and the Equity XL Debt Elimination Program, and Steve
Allison up here on the annuity team, we're here to help you out in all your case design, making sure you get all the right questions asked. So reach out to us.
With that, happy selling.